This is the E-commerce Edge Podcast with your host, Jason Greenwood. Nicole Jass, the SVP of Enterprise Strategy at Signifyd. Welcome to the podcast.
Yeah, thanks a lot for having me.
It is super cool to have you along for the ride with me today. Before we get into what Signifyd is and does and what makes it special out there in the market, why don't you help me and my audience understand how you got to be here in the land of digital sort of anti-fraud, anti-chargeback, protection of merchants under a broad umbrella. How did you come to be in this space to begin with?
Yeah, no, good question. And I'm trying to figure out if I do the Goonies version and go all the way back or I don't know that anyone wakes up and is like, I want to be a fraud fighter. But let's see, my journey, I was over at Worldpay and was leading product teams at Worldpay. Before that, I was in ad tech, running a company in ad tech, joined Worldpay at the time to help them connect data for customers. In ad tech, I was really helping to figure out how to connect impressions to engagements. And the thesis when I joined Worldpay was, could I help them connect payments and actual purchases all the way back to an engagement on the marketing side? And so I thought that sounded really fun. When I joined Worldpay, I then found the fraud teams. And I was like, oh man, you guys are doing some really cool stuff with data and helping connect and see how Nicole shops across Nordstrom's, Walgreens, Safeway, you name it, not just from a marketing perspective, but is it Nicole? And so I found that fascinating. To be honest, I could do a lot more with the data when it comes to fraud than I could on the marketing side. So I just became fascinated with fraud, with identity, and ran product teams at Worldpay there. Gave me a great point of view to look at the landscape, all the different fraud providers. I had some really smart folks that worked for me. And that's where I came across Signifyd. And the game changer for Signifyd to me was, one, we could shift liability and just say, hey, we're going to guarantee our decisions, which seemed like a pretty big game changer, and just the ability to drive revenue, not just stop fraud. And I'm a growth person. I like growth, not just lower your cost of goods. And that's why I like the marketing side too. But gosh, if I could go out there and actually help people make revenue, not just stop fraud, that sounded pretty great. So long story short, liked Signifyd so much that I decided to jump over and play on this team.
Wow, what an amazing journey. And I have had, back when I was working mainly in retail e-commerce, we had some clients that, especially in the agency side where we're building solutions for retail merchants, we had some clients that used Signifyd. And obviously for them, the chargeback protection is probably the single biggest value that Signifyd brings to the table. Of course, anti-fraud is important, but if it isn't backed with some sort of, almost like an insurance, right? It's Signifyd effectively provides chargeback insurance. That's effectively what you're in the business of. Sure, you provide that insurance through a technical layer, but that's effectively what you're providing for merchants. And maybe you can talk a little bit about the amount of fraud that tends to happen, say, in a large market like the United States. What percentage of overall transactions tend to be fraudulent through an e-commerce website, what the cost of fraud tends to be to merchants in those scenarios, and why this may, because obviously the cost of insurance and with any insurance product has to be less than the risk that you're offloading to the insurance provider, right? And so what you're giving up is a little bit of extra fees and providing obviously gateways, security features, etc. But what you're gaining is a safety net that is difficult to have any other way. So talk us through some of the commercial benefits that most of your merchants see by deploying your solution.
Yeah, no, great question. And I do think if you start with the numbers, it'll show you why it's not really, it's somewhat like an insurance, but not really, because there's such a strong benefit. Like my car insurance, my home insurance that have gone through the roof, right? Like I just pay out the nose. And the only time I see a benefit is if I get in a crash or hail hits my car. With what we're doing, you don't have to have some kind of emergency or accident like that to get the benefit, because you brought it up, like the numbers. I would say, and it definitely varies by vertical.
Yeah.
But let's take the retail vertical. And at this point, I would say if you're going to launch a website and the big merchants that we have, less than 1%, probably less than 0.5% of transactions are actually fraud, which means that 99% of their transactions are good. Mm-hmm. And that's where the actual problem lies, is that I don't know a merchant out there who's getting 99% of their traffic through. And when I say through, I mean through their fraud provider and through the bank. because they get to say no and the bank gets to say no, right? And so that's where the real proposition lies, is how to get as close as you possibly can to that 99% and catching the first somewhere between 85 and 90, maybe even 80 is actually pretty easy, right? There's easy good, and then there's like easy bad. Like the top 0.1% are super easy. Like where we make our money, and the hard part is that gray area of how do I find out, like, and I will say so often solutions have sticky fingers. They go to grab the bad one and end up grabbing, like, for every bad one, they grab 100 good ones. And it's a terrible experience. So if you think about, we call it success rate, your approval rate and your auth rate. If your success rate's 90%, that might be pretty good, but that still means there's 9% of your customers you're saying no to and creating a frustrating experience for. So that's our real proposition, is not only are we going to get the bad guys out, but we're going to get as close as we possibly can to that 99%.
You make a very good point, because as someone who's a digital nomad, who has lived in 3 different countries, who has business and personal bank accounts in multiple countries, who has business and personal debit cards from multiple countries, multiple banks, multiple fintechs, I have family that live in the US, I have family that live in Australia, I have family that live in New Zealand, I have family all over the world. And so I'm hopping online, I'm buying flowers for Mother's Day for my mother in Australia through a local online florist in Australia. I'm buying plane tickets to fly out of Mexico on a New Zealand business debit card, right, where I have to put in the billing address of New Zealand. My physical address is in Mexico because I own a house in Mexico and I actually live in Mexico. And then I'm wanting to fly to Europe, right? And so as someone who does almost all of their purchasing online, I realize I'm an outlier, and I realize that's strange. Only about 20% of all retail spend is up to 20% is digital now. The rest of 80% is spent in physical stores. And I realize I'm more like probably 90-10 or 80-20 the other direction, which is like all my transactions are online, because I don't enjoy physical shopping. And so I try to avoid it like the plague. But as someone who has very complex international banking and finance structures, it is an absolute nightmare, because even with major airline websites, I cannot buy through those websites because I can never find a combination of a VPN with putting in the right location with my VPN, because it detects I'm in Mexico. And then if I put in a different physical address because that's what's on my bank card or whatever, then all these things, and then the ABN doesn't match, and all these things are a nightmare. And so what we find, even when we're trying to book international travel, 9 times out of 10, we have to go through a broker, an airline brokerage website that is effectively an online travel aggregator, an online booking agent, versus going through the airlines directly. Because 9 times out of 10, I can't find a combination of card and addressing and phone numbers and mobile app authentication that will allow me to purchase the damn tickets through the airline. And I experience that all around the world through lots of different verticals and categories. And I live a life of frustration as a result. Now, I realize that I am strange, and I realize that most people don't have to deal with that level of complexity in their business and personal and living life. But as somebody my wife and I don't have kids, and our goal in not having kids was to travel the world, and that's what we do. And so we have dogs instead of kids, right? And so for people like us in particular, buying online through anyone almost other than Amazon is an exercise in futility and challenge. And this is something, and these are all false positives, because I could validate.
Like, here's your money.
I'm giving them my passport. I'm giving them my residency card. I'm giving them access to my cell phone. I'm giving them access to absolutely everything they should need to be able to validate my identification, that I am, including being able to hold up and take a screenshot of my face holding up my own passport. And the fact that we still have these challenges today in international payments, frankly, as someone who's worked in e-commerce for 26 years now, is freaking disgusting. And I think that false positive rate is far higher than most merchants think that it is.
It is. That's a really great point. First of all, airlines is where we're going next. So that's what I just heard from you as a pain point. We're getting around to that problem. But 100% agree with you. I now lead our strategy and sales teams, and we collect metrics from merchants to say, hey, let us help you do some analysis. And as you get those metrics back in front of merchants, a lot of times they're like, oh, geez, like I didn't realize 10%, 15%, 20% of my customers are falling out of that last funnel when they're literally just like you on your checkout page. The marketing has worked, your merchandising has worked, everything has worked except the submit button and that checkout process. And that's where it all breaks. It's a frustrating experience. And actually, I haven't had a decline for a while. And last week, in a very critical moment at 3 a.m., when I was sitting in Dallas and finally decided to fork over the money to go to the England-Croatia game for the World Cup, I was like, fine, I'm doing it. And put my Amex in 3 a.m. We'll just call it thousands of dollars. And I got declined. And my Amex has never declined me. And I'm in the US. I'm on my phone that I am always on, sitting in Dallas, about to go to trying to get tickets to a World Cup game in Dallas, declined. Chase declined. And then I sat there for 30 minutes because you have to wait for the tickets to come back. They're the tickets I want. And both of them emailed me, did their secondary authentication saying, hey, this was just fraudulent. Was it you? And I said, yeah, it's me. Please, I want these. I've decided, don't let my moment of insanity go because I want these tickets. And 30 minutes later, when the tickets became available, tried Amex again and no, declined. And then Chase said yes. I mean, just think about what that does. Okay, I'm a Chase fan now. You got me my tickets that I wanted. But if you just think about it, I'm sitting in Dallas, I'm on my phone, and that's the kinds of stuff that Signifyd can pull that kind of a signal, right? And we have connections now that can help us with issuers send those signals over. Because if Amex would have known it's me on my phone sitting in Dallas, then they could have approved me and saved me from such a terrifying experience at 3 a.m.
And what's interesting is that the fintechs versus the banks seem to be better at this in most instances. And like I use Wise, I use Payoneer, I've used lots of different fintechs because they seem to have their shit together better than the major acquiring banks do. And so even my ASB app from New Zealand, ASB banking app, is pretty average. Wise will almost always say, if it thinks that there's potential fraud, it will say you need to authenticate into your app, you need to approve this transaction, all that sort of stuff. They don't just outright decline it. They route me through a further authentication layer to make sure I actually want to execute that transaction. Whereas oftentimes ASB even on a debit card, it'll just straight out get declined. It will just straight out get declined. Or in other instances, Payoneer has far stricter security, it seems, than Wise. And so therefore, even though Payoneer in theory is an international fintech banking infrastructure, they seem to decline much more regularly than Wise does. PayPal is hit and miss, right? They have very strict, because my business PayPal account is based in New Zealand and I'm trying to pay for things internationally. And if it detects that I'm in Mexico and I'm trying to pay something with my PayPal account, Mexican currency, it can be a real problem. Oftentimes it will just say, sorry, you can't do that transaction, right? Because you're not paying in New Zealand dollars. Your PayPal account is attached to a New Zealand business and your entire account is an entity, but it's a multi-currency digital wallet that I should be able to pay any currency in the world out of, and yet I can't in many instances. And so I just think that payments infrastructure, full stop, especially in an age where we're carrying that around with us 24/7, this is never more than a foot away from my body.
100%.
It is just, I find it disgusting, shocking, surprising. Why are we not using QR codes? Why are we not, and China's figured this out, right? Asia in large part has figured this out. They have exceptionally low rates of fraud because of their digital banking and payments infrastructure, their authentication infrastructure, their ID infrastructure, pay by face, pay by thumbprint. Why is it that it feels like in the global West, we have such shitty legacy payments infrastructure versus the global East?
Yeah, no, great questions. I think we had an economy that was pretty well established before the phone, I would say, is kind of part one. We are, at least for us, we bought a company who does device intelligence about 1.5 years ago because we said, this is such a strong and rich signal that we don't want to even rely on anyone else. We want to have our own. Because if we know it's Nicole and Nicole's phone, then the rest of it is just, is she connected to this card and is there money on the card? But the hard part is just to figure out, is it me on my device? And sometimes, to your point, I buy way more on my iPhone and my iPad and things where you can get those rich device signals. We can get device signals on computers too. There's just more to be had. And the hard part of phones, I will also say, is there are companies like Apple and others who are trying to make it hard for persistence.
Yes.
And so that's the hard part in the US. It's not just the payment infrastructure. There's also some difficulties with it's kind of where privacy, right? Like where there's just this trade-off. And so for us, some of the keys that we've had to unlock is just finding persistence. So across my device is 3 or 4 years old. So I'm one of the easy ones. I need to go pick up a new phone, but most people turn over their phone every year and a half. And so, or you go clear your cookies or your cache, and there's things that Apple and Google are doing to try to promote privacy, which is a great thing. But when you're trying to fight fraud, and trying to make sure that it's still the same person. So I would say that's some headwinds that we've had to overcome, but we find those signals so rich and so helpful. And to your point, just the amount of data that we get at checkout, we make pretty good decisions. But you have to collect all that data. And then what we found is it's not enough for us to get it right. The issuers have to get it right. And so that's where we've created direct connections to many of the issuers to help them get it right. For Cap One to send them over an actual score and data packet, because they don't get the luxury of knowing it's Nicole and Nicole's phone. They just know it's $3,000 at 3 a.m.
Yes.
Like this is not like her.
This is not her normal pattern of purchasing.
It's not her normal pattern. That's all they have to go on.
Yes. It's standard heuristics, right? And unfortunately, those heuristics don't take into account what you have and what you know, and they don't combine those two together with standard at scale heuristics. And I think that's the disconnect. That's what it feels like. And walk us through the points at which a transaction can fail even before it gets to a platform like Signifyd. Walk us through the anatomy of a transaction and all the ways and places in which we have to overcome these security hurdles to be able to even execute a transaction in the first place.
Yeah, no, good question. The basic infrastructure for payments is when I go and hit submit, the payment goes off to typically a gateway, right? So a gateway or your payment processor. If you're multi-acquired, it's going to go to a gateway and then it's going to split off and go to you're going to fork the code and go to different processors. But let's just say for simplicity's sake, it goes out to a payment processor. Mm-hmm. So typically the payment processor then has to go out to the brand. So if it's a Chase Visa, it's going to go to the payment processor, to Visa, to Chase, and then back through all those different steps. The key folks who are going to decline it, the processor might have some kind of rules like velocity rules and checks and certain things that they're going to do. They also might have some just drop off, right? It's rare, but there's some drop off. So it has to get through the payment processor, through the network, and then the issuer is the one who's going to take the most out, right? They're going to say, hey, these look risky to me, and I'm going to pull them out. All the way back through. Then it depends on where the merchant has their fraud solution, right? So many, 5-10 years ago, everyone had a post-auth fraud solution because they're like, hey, let's see what the issuer takes out, and then I'll take out my piece that I think is still fraudulent after the issuer has said yes. Fine, but that means you're dumping all your junk on the issuer. And when you dump all your junk on the issuer, guess what? Like they're sitting there sifting through all of this transactions, and their sticky fingers are going to take out more good transactions. And so,
and also if your history shows a lot of declinatures,
great point.
then all of a sudden you now can be put into a higher risk bucket, and so therefore
100%.
Their heuristics are stricter and harder on you than they might be on a fresh account.
Yes. And if you've had more chargebacks, and if you're just a dirty merchant and you have all this data coming through, bad transactions, if you have card testing and you haven't protected the issuer from that card testing and the bin attacks, your auth rate's going to tank. Mm-hmm. And that means more good customers are going to get caught up.
Have the experience that you and I had.
Yeah. And have the experience you and I had. The better way, and where 70% of our traffic sits today, is pre-auth. So that's where we are the first call. So when I hit submit on a website, it first comes to Signifyd. And we have all of the rich data to say yes or no. That's also a much better experience because you get that notification right away. Because sometimes if it's post-auth, I get the approval and then an hour later it's, oh, by the way, it wasn't approved.
Yeah.
And so if it's pre-auth, we can right away say yes or no. Well, we clean up all the data. And now what the issuer sees is everything Signifyd has said yes to, which is a much cleaner flow. We've gotten rid of like card testing, bin attacks. the majority of the fraud. And so that's where we see those issuer auth rates really go up, is if you can actually sit pre-auth.
And why do you think it is, just in the case of airlines, for example, why when I would get declined by Delta and American Airlines and United and Aeromexico and Viva Aerobus and everybody else, why when I go to Webjet and I'm buying tickets for the exact same airlines on the exact same flights, why would Webjet approve me like 99% of the time? And the major airlines, I can't seem to figure out a combination of cards and addresses and locations and VPN-based locations and everything else that actually gets the transaction through. Is it because that somebody like Webjet is willing to take more risk on in terms of their heuristics, and so therefore their barrier to entry is a little bit lower than the airlines who their anti-fraud heuristic scoring must be so tight that they just go, if anything doesn't look, smell, or feel right about this, we're just going to decline it. It's that simple. Is that what's actually happening behind the scenes?
It seems like it. If it's not, if your card is getting approved by your issuer, then my guess is it never got to the issuer or it went through the issuer and the issuer said yes, but the airline said no. And so I think there could be, one is risk tolerance, but the other one is decision accuracy, right? Does Webjet have a better model that they're actually able to make better decisions? And so that's what, to me, it's all about, is decision accuracy. And then if you have a really rich scoring process, then you can say, hey, here's the propensity for this to go bad. And you can loosen or tighten your thresholds based on how much risk you're wanting to take. But the whole point there is to have a really strong signal and score, so that I know, hey, I'm willing to take this much risk. And as I start to lower my threshold, I don't get clobbered by a bunch of fraud.
And I wonder why the airlines haven't done simple things like saying, okay, if you're logging in via laptop to our website and you're making a purchase through there, we don't like that because we don't have clear enough signals. Okay, we're going to point you to our app, our mobile app, to execute the purchase.
Right.
Here, scan this QR code for this transaction on our mobile app on your device, where you're going to have your digital wallet on your device linked to our app, our mobile app. Just scan the screen. It'll automatically open it or install the app on your phone so that you can execute and complete this transaction. There are ways to do this, and there are also identity validation services that can be embedded in your mobile app, which literally have you hold up your phone to your face, scan your face, go into a central authentication system. I've had to do it for even when I used an online notary service in the United States, in Texas, to validate my birth certificate. There are online notary services that can even validate your identification and then give you a digital key to prove that you are who you. So there are many systems, it feels, out there to be able to, instead of simply declining, saying, hey, we're just going to make you jump through one additional hoop to validate who you are, confirm this, and you only need to do it once, because from then on, we will know who the hell you are. It'll be attached to our app in your phone with a validation key, with an API key. And it feels like either many merchants don't realize what is out there around technology to help validate someone's identity other than just a payment gateway, or they're just too lazy or cost and risk averse to even think about implementing those tools.
Yeah, I think you bring up a good point. Like when I would say there's a spectrum of the consumer's willingness and desire to get that purchase and how unique that purchase is, right? And when you're trying to do a certain flight that you can only get on that one airline, you're willing to get your passport out and do all this kind of stuff, right?
Yeah.
On the flip side, when you just want a t-shirt and you found the t-shirt that you want and you can get that t-shirt on 12 different websites, that merchant can't put any friction in front of you because you're not pulling out your passport.
I'll just go to another website and do it there.
You're just going to go to another website. You're not going to pull out your passport for them. So I think it's that mix of knowing what kind of captive audience you have and how much friction you can apply in the process. A lot of the merchants that we work with in retail, it has to be frictionless. And it's why 3DS isn't nearly as prolific here as it is in other parts of the world. One, because it's mandated, but two, because we won't tolerate it.
Yeah.
Right? If you're going to put friction in front of me, I'm jumping in and I'm getting my shirt somewhere else. And so that's what I love about technology is we can get so much information without you even knowing, right? Like we can just passively know where you are, where you're on your phone, and pull that together across other behavior we've seen across the network so that we can know it's you without you having to prove it
Yes.
to us and get your passport out and prove it to us. We have ways to silently allow consumers to prove it to us that it's them.
And I think even in our digital wallets, I think, correct me if I'm wrong here, both Apple and Android, if you, for example, add a card to your digital wallet and you either type it in versus scan it in, it knows. It knows whether you typed it in or scanned it in. Obviously, if you typed it in, then maybe that card was stolen. Whereas if you
Right.
physically scanned your physical card, it was right in front of your phone and you use your camera to scan it in, that's almost as good as a card present transaction, because you at some point you
Right.
had that physical card. Unless you stole somebody's wallet, that's your card, that's your ID, that's your phone, that's your cell phone number. That's a pretty strong signal that you have the physical card, right? Or that you could scan the physical card should you need to do, right? And so I just wonder what is next in the world of payments. And I thought that we would move to a lot more QR code usage after COVID, because everybody got used to scanning QR codes to do almost everything. And we have authenticator apps now, and everybody knows what a QR code and authenticator app is to set up an authentic. Like, I moved away from in-app 2FA in many instances, because if I was on the road or I was international and I didn't have an internet connection or something like that, I might not be able to open the app, but I can always open my authenticator and get a code out of it to give for a payment. So it's like I wouldn't be able to receive an email maybe, but I can certainly open up my authenticator app and get a code. And so or I couldn't receive an SMS, for example, because I'm on an eSIM or something like that overseas, and so I couldn't get an SMS, but I can open up my authenticator app and I can get the code right there for 2FA. So I feel like all the technical pieces are there. I'm just not sure who's going to harmonize those first. Meaning that when is this? Because it feels like the payment rails, particularly in the United States, are so fragmented today that there is no one single entity like the government of China does in China, and they just dictate this is how the country is going to operate, and this is how payments are going to happen in WeChat, and this is how it's going to work, right? And this is our unified payments network countrywide, almost 2 billion bloody people. This is how you're going to do payments, right? We don't have that in the global West. And so I wonder when payments infrastructure and more simplified, because payments infrastructure was always designed to favor the merchants and the banks. That was the whole idea behind payments infrastructure. It wasn't if you had a UX designer look at the way payments works today from a clean sheet of paper approach, they would laugh at the way payments work today. And that's the problem, is that this whole entire, if we re-engineered the entire payments infrastructure around the best user experience we could create, we wouldn't recreate what we have now. I'm sure of that. And so I wonder who is going to take the lead here in simplifying this for everyone else.
Yeah, no, it's a good point. So I came from ad tech, and when I joined Worldpay, I started learning about payments, and I was like, holy cow, like this is so stinking complicated. And even just like interchange rates and routing and just all this complexity.
Credit versus debit versus
debit. And I'm like, we just created these rails so that everyone could put their toll booth on the rails.
Tokenized versus non-tokenized versus.
At the end of the day, it's all there for trust, right? It's all there so that an anonymous person can buy from an anonymous seller or from a branded seller. But this whole infrastructure, Visa, MasterCard, Amex, your banks, everyone exists for trust. Right. And that's why I like the Chinese government, because they can establish that, hey, we're going to be that symbol of trust. Here in the US, we're too far gone. I want my loyalty points. You're not going to have me pay a different way. I want my loyalty points. But the backbone of all of it is trust.
But trust for who? Because I don't think, because most, even I don't do credit, so I only do debit. But I have chargeback protection on all my debit cards, same as if I was using a credit card. So who are we trying to create trust for? Because most users, I don't think they choose, for example, to go with one bank over another major bank that issues credit and debit cards because they trust one more than another. They just they know that they're going to be protected. It feels like the trust is all for everyone other than the consumer, right? It's to create trust along the value chain so that they will continue to offer these services to the market. And what I'm saying is we've got the balance wrong. The balance is so heavily skewed in the favor of the banks. The balance is so heavily skewed in favor of the processors. it is so heavily skewed away from the consumer experience that the balance is just, it feels all wrong. And so you're only one company, you only handle one segment of the market. I understand that. I get that. I guess more than anything else, I'm venting to you and I'm voicing frustration to you,
Yeah.
because when I used to, and I work in almost exclusively B2B now, so we don't normally have to deal with this type of problem. But when I was working primarily with retailers, this is a problem. It is a challenge. It does introduce unnecessary friction. We do see false positives. And look, I've used from Fortis to like Radar, and like almost every single anti-fraud system out there in the market I have implemented at some point in my career, and they all have false positives. Every single one of them. It can be anywhere from 0.1% to 1% of false positives. Now, that might not seem like a lot if you're a global multi-billion-dollar merchant, but if you're a small merchant and you are relying on your business to feed your family, like a +1 or 2% declinature rate, and based on false positives, that is material to your business and your livelihood. And that is the thing that I'm concerned about.
Yeah. Yeah, no, you're right. I think the trust is on both sides. I think we get to take it for granted as consumers that I have my chargeback rights and I have my all of those. And so that there's trust on that side. But to your point, I think that what we're trying to build is the ability for a merchant to instantly trust a consumer, and to allow that success rate to go up and those false declines to go down. And yeah, can Amazon has so much data, a ridiculous amount of data scientists and ML engineers, and the data signals they get out of Amazon, they know more than we probably ever want to know that they know, right?
Yes.
Yeah, but how do you bring that kind of ability to trust, and then also offer, because Amazon knows us so well, they'll give us instant refunds. It's not just, I know I'm going to check out, but I also like, hey, this didn't work out for me. I know I had a bottle of vitamins that broke in shipping.
Yeah.
And they're like, yeah, just throw it away. We're sending a new one.
Yeah.
Think about the amount of trust they have in me. Know that I'm not the kind of person that gets bottles of vitamins every week and says, oh, it broke. That's the kind of stuff that a consortium network allows us to have, is to be able to create that kind of, it's a really good point you made, right? Of that, the trust the other way, right? To say, hey, this is a really good shopper. You should treat her really well. And you should give her a great, amazing returns experience. She's calling in for an appeasement. Give it to her.
Yeah.
My mom actually had the opposite happen. She bought, I don't know, $400 worth of stuff. I'll leave the retailer nameless for now. And one thing didn't show up. A shirt didn't show up. Mm-hmm. And so she called in and they said, basically, no, we don't believe you.
Wow.
And declined any kind of an appeasement and said, we're not shipping anything. And she got so frustrated. She called the bank. It was a private label card.
Yep.
And the bank honored it, did a partial chargeback, gave her $50 back.
Yep.
But then she went ahead and canceled that card, won't shop there anymore. My sister and I have wrote them off. Like, we team shop.
Yes.
So if you're going to make my mom mad, you're going to make us mad. But just think about that lack of trust. And my mom got really upset. They don't trust me. They called me a liar.
Yeah.
They basically called me a liar. And so I'm not shopping there anymore.
Mm-hmm.
And so that's the kind of trust that, like, that was silly, right? That was so knowable. And that she's a good shopper and just, she has no history of chargebacks.
Yeah.
No history of these abuse chargebacks. And they called her a liar. And so now she won't shop there anymore. And so that's the problem with not having the ability to know that she's trustworthy.
Yes.
And do the right thing. If they would have been like, oh, hey, that's no problem. Let me just ship you out another shirt. Mm-hmm. If you would have got the Amazon experience, it'd be very different.
Yeah, and to your point, I've been shopping with Amazon for years now, and I never get declined. My transactions always go through. I'm always doing it on my mobile app, so they know who I am. And if there's ever a question about authentication, they'll just kick me out of the app, force me to re-authenticate, force me to get a 2FA code, and then once I authenticate back into the app, I'm straight back into my experience again. And I had an experience once, which is the only time I've ever had this happen with Amazon, where they said something was delivered. It was tracked as delivered. We never received it. And I got on and I asked for a refund because I said, look, your tracking app in the app shows that we received it on this time on this day. I most definitely did not. So maybe this got delivered to the wrong address and somebody signed for it, but I certainly didn't sign for it. You've got no proof that I did sign for it. I don't have the item and I expect a refund for this. Now, so what they did is they issued the refund immediately to the app, or they asked me if I wanted a store credit or a refund. I'm like, well, I'm going to buy off Amazon again, so I'll just take it as a store credit. So I just added it to my app as a store credit balance. And then about a week later, this item turns up on our doorstep randomly. just randomly. So
Hmm.
I know that at least in Mexico, they oftentimes will require for the carrier to get reimbursed if it's not Amazon internal infrastructure, if it's like a contract driver, whatever. They will require that the delivering party take a photo of the item at the person's house or at the point of handover to the customer, and they'll just get a digital photo of that process right then and there. So address, person, item, right? We can sync these two together. That delivery driver must not have done that. And so they must have gone after that person, and then they were like, oh, geez, we need to, I don't know, maybe they stole it, who knows? But it was random that it turned up at our address a week later. And I had no way even to re-advise Amazon because they had already refunded me
It's
instantly.
here now.
I had no way to even go back to them and say, it finally turned up. And they obviously don't care because they're like, this guy is a great customer of ours. He buys,
Precisely.
100 parcels, 100 items a year from us. Who cares, right? We'll go get that off the carrier because whatever happened, they didn't guarantee that they delivered the item, and they couldn't prove to us that they delivered the item. So we're just gonna refund this guy, right? And
Yeah.
so to your point, I'm not a high return rate customer of Amazon. I hardly ever return something to Amazon unless it's literally not what I ordered and it was misrepresented to me. I think I've only returned something two or out of hundreds of purchases on Amazon, like maybe twice, I think, on Amazon. So they have this track record. They know what that looks like. And companies like Shopify and ShopPay, which is obviously Stripe under the bonnet, they have that level of information across their entire network of stores. And I guess what you're saying is Signifyd is trying to build a similar trust network amongst all of your partners so that the signals that you send to the payment processors are as enriched and complete as they can be to minimize false positives, if I'm reading between the lines.
Yeah. Can I bring you on our future sales calls? I think you just nailed it. That really is, because you said something that was really important, and I think it ties to the future of payments, is that we can't just look at that one transaction, that one return, that one purchase in isolation and just look at your signals of I'm buying in Mexico, I'm going to New Zealand, and like all this other stuff. Context, right? Context is the future to know, hey, wait, that's actually really normal for him. When you go to return something, that's abnormal.
Yes.
And he's a really good purchaser, doesn't return stuff, not an abuser. Just give him what he wants. Give my mom what she wants, right? Yes. They are good buyers as opposed, and to be able to do that the first time you buy there is powerful.
Yes.
Like with Amazon, I don't know, maybe when my kids grow up and create their own Amazon accounts, because everyone else already has an Amazon account. For the first time, they're not going to have that context. But that's where the power of Signifyd, because we use our network, the first time you show up on a new website, we have that context. And we can tell a person, he's a really good buyer. You should go ahead and do this for him, or you should accept him or give him this appeasement because we've seen him across our network and you're going to want him as a customer.
And it's almost like a gold, silver, bronze kind of a rating, right? We need to be able to bucketize people pretty rapidly into a standardized context that means that these merchants can have faith not only in you and your fraud, anti-fraud, and chargeback protection for them, but then also they can have trust that because you're providing effectively that insurance for them, you are not going to generate an excessively high false positive rate to protect yourself, because it's all fine and good to have anti-fraud protection, but if it creates massive amounts of false positives, then it's it's counterproductive, right?
Yeah, no, I actually like that because we take liability for chargebacks, we can push the edge.
Yes.
And we can say, hey, this is iffy. We've seen this be a pretty good customer. We're going to accept it. And we're not accepting it on your dime. We're accepting it on our dime. And so if it comes back as a chargeback, we're like, okay, we shouldn't have done that. But having that learning, like chargebacks are our gold, right? That we know, and that allows us to push the edge and to say, hey, we're gonna go and raise this threshold as far as we possibly can. And we're actually, our investment is getting those chargebacks back.
And in most cases, you want to be the gateway, but you can also just be the security layer. So let's say I'm on Shopify and I'm using ShopPay. You can be just the security and anti-fraud layer, whereas you can also act as the full payment gateway as well.
So we don't have a payment gateway. So we would sit in front of the payment gateway. We have partnership with various payment processors and gateways. But our job isn't to do any kind of payment routing. Our job is really to enhance the payment payload and then be that fraud layer.
Nice. And if you were to look out over the next 6, 12, 18 months, obviously AI is a big deal. And I'm guessing that a lot of your heuristics and everything else is driven by AI anyway and machine learning. But if you were to look out over the next 6, 12, 18 months, what either are your merchants asking for that you don't do, or what other gaps do you see in the market that you think, hey, look, we might not do this today, but give us 6, 12, 18 months and we will be doing that thing?
Yeah. No, I think it does probably anchor a lot into AI. Like I think AI from agentic commerce and it's rising, but it's still so tiny that I'm using AI 100% to make my decisions and stay informed. I'm not yet sending AI off to buy my stuff,
Yes.
right? We're starting to see a little bit of it, but absolutely readying everything to be able to accept the different API protocols, to be able to sort between bad bot, good bot if I send an agent to go crawl a site. So that's a huge effort in the works. And a lot of it comes back to identity, but it's not just now, is it Nicole on Nicole's phone, but did Nicole send this agent? Do they have permission? Are they authenticated? So I'd say that's a big thing that we're working on. And then the other big thing is natural language and being able to interrogate our data with natural language. Playing with it here at work, not just playing with it, leveraging it, right? To be able to just ask AI the questions that we want to ask, and then be able to get our data to our customers in that same way so that they can interrogate our data through natural language models. And so I was just watching, what was it, Age of Ultron with my kids last night. And then Ultron comes on and I'm like, gosh, they predicted some of this, right? Just the way that they're interacting with the agents and AI, but we definitely want to be Jarvis, not
Yes.
Ultron. But yeah, I think that's what we're thinking about, is how do we empower our customers to have that natural language conversation with our data and interrogate our data, and then also make sure that false declines to agents is just as harmful.
Yeah. And do you see your role ever? I know you've massively focused on retail today, but in the B2B world that I play in now, where do you see your role starting to become impactful in B2B transactions? Because today, something like 80+% of B2B transactions, they're based on trade credit, they're based on trade relationships, they're based on approvals, credit limits, all sorts of other things. And then there's third-party providers like Allianz that provide trade credit at checkout that doesn't have to be provided by the merchant. So there's much bigger volumes at play in terms of dollar amounts. There's more complexity at play in the B2B world, and yet now B2Bs more than ever before want to acquire customers digitally where they didn't before.
Yeah.
And so that's becoming a big deal. So maybe the first transaction goes through a business credit card or a business debit card, and then maybe they get assigned an account manager, and then they get assigned a trade credit account or whatever it might be. But do you see a place for you to have a bigger impact in the B2B world in the future?
Yeah, absolutely. I think what's exciting is how extendable our modeling capabilities are, and the way that we think about machine learning, AI, that it's extremely extendable to almost any kind of problem statement. And if there's a way to feed the machine, here's what bad looks like. If it's a chargeback, great. If it's not a chargeback, some kind of a bad debt that comes back in the form of some kind of a false signal or a bad signal, then our model is extremely extendable. We do some B2B now, but as you mentioned, it's on cards.
Yes.
And largely card volume. But yeah, no, I think that the way that we have our models crafted and our data pipelines, that we can absolutely take on more and more use cases.
Makes complete sense. And if you could snap your fingers and sprinkle fairy dust on the e-commerce industry writ large and change one thing about it, what would it be?
Man, great question. What would I sprinkle fairy dust on? I think that it's still so hard for us to get our hands on metrics a lot of times. Like when we talk to customers and they're having to get it out of disparate systems, and that's what I wish for them is their data on a platter. And that's where we usually get with them after they work with us. But as we start to work with them, just helping them uncover. And sometimes we have to play like Sherlock Holmes, right? And just be like, what if we go get this? And what if we go get that? And we piece it together for them. But if I could do anything, is just to have it at their fingertips.
I love that. I love that. And I'll drop in the show notes, I'll drop a link to your LinkedIn and also the Signifyd website. Other than that, if a merchant wants to reach out to you and learn more about the service you provide, the value you provide to them, the protection you can provide to them, what's the best way to get a hold of you?
Yeah, I think check out our website. You'll have our website. We have a contact us form. We'll get back to you within minutes.
Wow. Wow. That's a strong promise. Hopefully some of the merchants listening will take you up on that and go and check out the website. Now, as we do come down to the end of our time together, this is where I get to flip the script. I get to hand the microphone over to you. I get to let you ask me one question, any question you like. It could be personal or professional. So, Nicole Jass from Signifyd, what is your question for me today?
Yeah, I think I'm going to take your question and put it back at you. If you had fairy dust, and it can't be because I know that the airline problem statement is a big one for you.
Yeah, yeah.
Other than that, where would you put your fairy dust?
Look, it's mainly because I work with B2Bs every single day today. I think there is not with everyone, but a significant portion of the B2B industry, because only about 40 to 60% of manufacturers and distributors today in the United States offer e-commerce at all. And so versus 8% of retailers offer e-commerce. And so
Right.
there's a massive disparity between those industries, broadly speaking. And I think that a lot of the customers that come to me for the first time and they say, hey, we're looking at what's next, and et cetera, they either fall into one of two camps specifically regarding AI. One is sometimes they go, should this matter to us? Does it matter to us? Is it going to help us? Is it just a waste of time and money? Or they fall on the other end of the thing where they say, hey, we want to do AI. We need to do AI. How can we do AI? And can we skip e-commerce altogether and just do the AI thing? And it's kind of like they kind of fall at two ends of the
Yeah.
extremes. And I think the truth for most falls somewhere in the middle, which is it's important. It will transform your business. I use AI every single day in my business and have done for 2 years. And it is epic. I'm writing applications and I'm doing all sorts of cool stuff with AI. And it surprises me in good and slightly scary ways every single day. But it is not a silver bullet if you've never exercised the digital commerce muscle in your business, if you've never exercised that muscle, if you do not have that muscle, if you do not have that capability in your business, AI isn't going to fix that for you. And AI isn't going to,
It's a great point.
single-handedly fix your data and make it digitally ready, right? It's not going to. You still have to do a lot of foundational work to get even agentic commerce ready, because a lot of e-procurement systems, the Jaggers, the Coupas, the Arebas of the world, they're getting ready for agentic procurement, but they need to have an MCP server on your side to connect to. They need to have a full digital commerce catalog to pull in. It's going to be EDI 2.0 all over again. And the reality is most of these businesses, they are not ready with anything foundational, but yet they missed out oftentimes on they missed out on the internet era, they missed out on the mobile era, they missed out on the social era, they missed out on the e-commerce era, and they do not want to miss out on the AI era, and I get that.
Yep.
And so what I try to help them understand is we have to take very much, particularly if you have never done e-commerce before, we have to help you take a crawl, walk, run approach to this and get the foundations in place so that you can leverage amazing technology like AI to help make your business more efficient, to create a better customer experience for your customers. Because we now know, according to Forrester, that over 70% of B2B buyers today in the United States are millennials and Gen Z, right? They're not. So the buying demographics has changed, but the selling demographic hasn't in many cases. They have failed to adapt. And if I could sprinkle fairy dust, it would be, yes, take AI seriously, but understand that there is some foundational stuff you will need to put into place first
Yep.
before there are some muscles you are going to need. You wouldn't go to the gym for the first time and try to bench 220. That's not what you would do. You would
Right.
go and you would just bench the bar, 20
Yep.
kilo weight bar. Then you would do
Yep.
that for a month, and then you might add a little bit of weight, and then you add a little bit more weight, you add a little bit more weight. It's exactly the same thing with digital commerce, is that you have to build up that skill and capability internally before you kind of go all in on it.
Yeah. No, it's a great point. Love it.
Amazing. Thank you so much for your time. Really appreciate the conversation. Super, super. You clearly know the industry inside and out. Appreciate you sharing your wisdom with me and my audience, and I can't wait to speak to you again soon. Thank you so much.
Yeah. Thanks a lot. Have a good one.
Are you a B2B or D2C e-commerce merchant? Then head over to greenwoodconsulting.net to learn how we can help you scale your business.